Hey everyone, Palantir reported second quarter fiscal year 2024 financial results that beat expectations both on revenue and profitability. As a result, Palantir stock price is up over double digits following the release of these financial figures. I'm going to review those financial figures in more detail for you here today. I'm also going to update my buy recommendation of Palantir stock coming into this financial release. I did have Palantir stock rated as a buy. You're going to want to tune in to see if I'm changing that recommendation following the stock price increase. So let's take a look at the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Palantir reported revenue growth of 27% year over year and 7% quarter over quarter to $678 million. That figure was significantly better than what Palantir was forecasting for the second quarter. Additionally, adjusted income from operations came in at $254 million, which was also much better than expectations, according to what Palantir management told investors to expect. So let me share with you those expectations here. For the second quarter, Palantir said to expect revenue between $649 and $653 million and adjusted income from operations of $211 million at the midpoint. And as I just shared with you, the adjusted income from operations of $254 million was significantly better than the $211 million forecasted. So understandably, Palantir stock price is rising following these adjusted figures. Now, one area I've been watching closely with Palantir, and I've been talking about this for several quarters now, is the company's growth in commercial revenue and commercial contracts and commercial customers. I've known for a while that Palantir has strong relationships with governments. Palantir's services are highly desired by governments, and they can afford Palantir's services. What I was more questionable about is regarding Palantir's traction with businesses. Since Palantir's service is so expensive, I was curious if Palantir can make their products more affordable or more attractive in some way to businesses. And over the last several quarters, I've been seeing Palantir make great inroads with businesses. And this latest quarter was no different. U.S. commercial revenue grew by 55% year over year and 6% from the previous quarter. U.S. commercial customer count grew by 83% year over year and 13% quarter over quarter. They now have 295 customers. And you can see what I mean by their service being so expensive. They only have 295 customers. So there's a big opportunity ahead. The more they can make their services more affordable and the more they can show businesses what they can do. That's why this most recent strategy of going into businesses and doing sort of a boot camp and demonstrating what their services can do for enterprises has really worked well. Enterprises seeing tangible results from Palantir services increase their budgets and increase their willingness to pay these expensive prices for Palantir services. U.S. commercial remaining deal value grew by 103% and 11% quarter over quarter. Remaining deal value eventually turns into revenue when Palantir performs the services. Sometimes Palantir signs contracts, and many times actually Palantir signs contracts for several years for its service. It could be something like a 4-year, $40 million deal. And so that goes into its remaining deal value. And every month or every quarter, as Palantir performs the services agreed on in that contract, the money goes from remaining deal value into revenue. And so remaining deal value is a great indicator of future revenue growth for Palantir. And the fact that it increased 103% year over year is a great sign that Palantir's revenue growth acceleration has good traction longer term. Palantir's profitability has done very well since the company turned profitable on the bottom line. They've sustained that profitability. GAAP net income of $134 million represented a 20% net profit margin. GAAP income from operations of $105 million represented a 16% operating profit margin. The major difference between Palantir's net income and income from operations is the money Palantir made from interest income. Palantir has $4 billion of cash on its balance sheet, and Palantir can invest that in super safe government bonds or money market securities and earn roughly 5% interest income for annualized interest income of roughly $200 million based on 5% of $4 billion annualized. So this cash hoard is becoming a real asset for Palantir now as it invests and earns interest income while interest rates remain elevated. Prior to the company's financial release, I had informed investors that I would like to see Palantir do more with its cash balance instead of just invest it in US government bonds or super safe money market securities, because you and me can do that as well. If that's what Palantir is going to do with this cash, I'd rather have Palantir return that cash to shareholders and let us do that ourselves. But if Palantir has this cash, I'd like to see them get more creative. Maybe offer some creative financing to businesses to attract their service, to attract their business, because they have the cash. Maybe businesses are short on cash, but they want Palantir's service. Maybe you can make a deal and say, we'll sell you our service, but you don't have to pay us back until 12 or 24 months later. And that way, Palantir can use its cash to make its services more attractive to businesses worldwide, and in that way attract more businesses. Remember, they only have 295 US commercial customers. So I was hoping to see a little more of that, and perhaps they did do some of that because the evidence suggests they really did grow with US commercial businesses in the most recent quarter and in the most recent several quarters. But I'd like to see even more, because this is a lot of cash to have on hand for a company of Palantir's size. Now, I highlighted Palantir's latest quarterly results were so good that the stock price is up 11.5% on the day following the earnings release. Palantir is now trading at a forward price to earnings ratio of 63.82, a little bit above where it was prior to releasing these earnings results. I mentioned already that I've had Palantir stock rated as a buy. I've had it rated as a borderline buy, and I last updated that recommendation on June 6th. Following these financial figures and the continued success among US commercial businesses, I'm maintaining Palantir's rating as a borderline buy. The reason it's not a full buy is because of the relatively expensive valuation. If the valuation were to decrease a little bit into the 50s, into the 40s, I would certainly upgrade Palantir stock to a full-on buy. At current valuations, though, I would put it on the borderline. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.